Good morning, good afternoon. It is Wednesday. The week is halfway over, just like that. And to no surprise at all, the housing market is moving and there are some big shifts you'll want to keep on your radar. We've got talk of potential Fed rate cuts, cash out refinances hitting multi-year highs, buyers regaining some leverage in negotiations, and even new low down payment financing options that could open the door for more first-time home buyers. Let's break it all down so you can see where the opportunities are right now. The next Fed meeting is coming up on September 17th, and while the odds of a big move aren't high, there's chatter about a potential 50 basis point cut. Right now, markets are only pricing in about a 3% chance of that happening, but there are a few voices like Scott Bessent who's saying it's what the economy needs. Now, here's why this matters. The last time the Fed cut rates by 50 points, mortgage rates had already dropped almost 0.75% before the announcement. The cut itself didn't cause the drop, the expectation of it did. So if we see more signs that the economy is softening before the meeting, we could see rates dip again leading into September. There's also a lot of speculation about who will replace Jerome Powell as Fed chair. Betting markets currently have Christopher Waller in the lead, with Kevin Hassett and Kevin Warsh right behind. Whoever takes over will have a major influence on interest rate policy and in turn, the housing market. Mortgage rates dipped last week after a weaker jobs report, and that gave applications a boost. Refinance activity jumped about 23%, and purchase activity rose 1%. Now, I know 1% might sound small, but purchases take time to show real momentum. With a refinance, you could decide on a day yes or no and lock it in. But for a purchase, you've got to find a home, negotiate, and close, which means rates need to stay lower for a while to see bigger lift in buyer activity. The latest MBS housing index dropped again in August to 24, which is the lowest since January of 2023. More than half of the respondents now say they're in a buyer's market, which is up 32% from back in March. States like Texas, Florida, Arizona, Oklahoma, Tennessee, and Utah are seeing the biggest swings towards buyer power, with more inventory and more negotiation room than we've seen in a while. Cash out refinances made up 59% of all refinances last quarter, which is the highest share we've seen in years. And here's what's surprising. 70% of those homeowners actually accepted higher rates to access an average of $94,000 in equity. That means their payments went up by about $590, $600 a month, but they still saw value in consolidating debt or accessing cash. I'm actually working on one right now. Borrowers getting an appraisal waiver, which means we're going to close in 10 to 12 days at most. They're going to pay off quite a few of their big debts that are just accruing interest, and they're still going to walk away with extra money in their pocket. In the right situation, cash out refinance can be a real financial reset, even in a higher environment. In May, 56% of homes sold for less than asking, with the median sale price coming in at $45,000 below the list price. More inventory, longer days on market, and motivated sellers are giving buyers more leverage, especially in markets like Texas and Florida. That doesn't mean sellers are desperate everywhere, but in certain areas, it's absolutely worth negotiating, and that's why it's important to have a good realtor to help you negotiate wisely. Freddie Mac just expanded its CHOICEHome program to allow conventional financing on single-section manufactured homes, not just multi-section. This means buyers can now get in with as little as 3% down on a home that often costs around $200,000, including land. These homes have to meet specific quality and foundation standards, but it's a big step toward expanding affordable housing options, especially for first-time home buyers. So whether you're buying, selling, or thinking about tapping into your home equity, the market is shifting, and these changes could open new doors for you or your clients. If you want to talk strategy or see what options are available for your situation, please reach out. I'm always here to help you navigate it. That's all I got for you guys today for this week's update. I'll see you on Friday for the live stream at 9 a.m. Pacific Standard, and then as well next Wednesday with another market update. Take care.